Okay guys, so welcome back to another video on the channel. The uploads have been quite slow the last few weeks, but we're back now. We are back. We had a very good January trading in the markets. I've actually been trading quite conservatively, maybe entering 2 to 5 trades per week maximum. Last week we did actually enter like four trades I think, and this week we're already up one trade, so we're up 3% for today, the start of this week, the third week of February. So hopefully we can see this week maybe 4 or 5% more. Let's obviously see how the markets play out, because there's no point forcing trades. We're already up, so there's no point entering trades just for the sake of it when we could have just protected our capital by not entering any more trades. So I know what the comments are going to say. I got a haircut. Boom, there we go. Are you happy now? There we go. Got a haircut. The beard's staying, so don't even comment about it. But yeah, it is currently around 1:30 in the UK. Our gold trade, we closed at around 3%. We were hoping for about 3.7%, but saw signs of reversal, and then we closed at around 3% on this trade. I've actually been experimenting in my trading with using tighter stops. I used to use around 50-60 pip stops and targeting those big moves around 250, 300 pips on gold. But now I've kind of been testing out this new sort of style of trading using the 5-minute, 10-minute time frames, which I'll go into later in the video. Using like 15, 20, today was 18 pip stop loss. So we are experimenting with doing this. Just easier to get a nice risk to reward, but obviously you do have the higher chance of being stopped out before the move happens, which is why I've been obviously experimenting and testing this strategy before I obviously take it onto the next level. Did actually call all these trades in my premium group, link in the description if you want. I basically share all my analysis, all the trades I take, and also follow my Instagram. I'll put it on the screen so you can keep up to date with all my trading, which I don't share on YouTube. I post every single day on my stories. I post photos and everything on there. So what I wanted to go into today before we start the analysis on this video is actually the future of this year. So obviously I am turning 18 next month, so you know what's going to happen. FTMO. We're going to do a series on the channel where I go through FTMO, through the challenge, share all my trades, through the verification, share all my trades, and then keep going with that funded account, obviously if we pass, and keep going with that series on how the FTMO goes, how much I get from the payouts and stuff like that, and maybe we can build up to the $300,000 FTMO account fully funded. Basically I'm going to show you what I'm going to do with all the profits, the money from the FTMO, so I think that would be a good series. So smash 500 likes if you want to see an FTMO series next month. That would be a good addition to the channel, another series. I know you people love the series on this channel. Okay, so what we're going to do now is I'm going to take you through what I look for. So say I'm just going onto the chart on a Monday, I'm looking for a trade. I'm looking to basically see what's happening in the markets, see if I can find a trade. So what I'm going to go over is what I actually look for from start to finish in finding a trade, executing the trade, and closing the trade. So here we go. Before we actually start the analysis, I basically want to say, if you're trading full time, or because I think it's half term right now in the UK for anyone that is obviously under 18 or maybe in uni, college I guess, don't trade all day. If you're staring at the charts from when you wake up, let's say 8, 9 o'clock, to when you go to bed, 10, 11, your eyes will be dead, your brain will be dead, and you just won't want to trade anymore after those. If you do that for a few weeks, you're just gonna burn out. It's not gonna be the best for you, and yeah, it's not advisable. So maybe take a break, go for a walk, do a bit of the old gym work. You see, we're getting huge over here on the Wheels Effects channel. But yeah, I just wanted to say that first before we actually start the analysis. So what I actually start with is, if we actually go back to before I actually enter this trade. I don't know why my screen's so glitchy, but who knows. But what you can see is we start on the 4 hour. I know a lot of people start on a daily, weekly. but I like to start on the 4 hour. So what we can see is we were ranging for quite a while, so we're in this range here. We can change this. So if you see that box here, this is when price wasn't creating new highs, wasn't creating new lows. This was around a 500 pip range in between here. This is from about the 10th of January to the 3rd of Feb. So when we broke out of that, what did we have? A nice drop down to around 1785. I called this drop in the premium group, by the way. So we couldn't actually create new lows down to this level here. Let's change this. There we go. We actually called to the 1790, which was good because then we dropped another 50 pips, then reversed back up. We couldn't actually create a double bottom here. So yeah, there we go. Now what I like to do is look what's actually happening on the candles if we zoom in. So if we go forward one candle, okay, so we've gone forward one candle now, and what can we see? So if we zoom in even more on the 4 hour, you can see that we had this little zone down here. So we had that zone down there, and this is a nice little support area. So now what we're looking for, so we've had the break of this area, push up, a retest on the higher time frames. So now what we're going to be looking for around this area is buy positions. So we could draw a Fibonacci on from the high to the low, and you see rejections perfectly off the 61.8%. So if we draw a little level in here, then we go down to the 1 hour, you can see that this 61.8% Fibonacci level, we had a nice rejection from this level. So if we go down even more, we're going down to the lower time frames here for entries. If we go down even more, we can see the price wick down, nice, bullish engulfing up. So now we're trading above this level. See, we had the push up there, and I actually entered this position. If we go back to here, this is where we actually entered this trade. So what we had here, bit of consolidation again, like we've seen previously. So what I actually did was look closely. So if we go down to the 10-minute time frame, what can we see here? Firstly, if we just change this to a different color, just so it's not the same as our key levels. I like to have different presets for obviously different scenarios. So there we have consolidation, just a nice light grey box. And what we were actually looking for, buy positions. So on the 10-minute, we entered a buy position at these wicks here, because after we came down to this consolidation, what did we form? Boom, a double bottom. So we came down, boom, boom. So price created equal lows here, so we couldn't create a new low. So obviously on the higher time frames, on the 15-minute, 30, we had a bullish engulfing up here, and this was when we waited for the pullback down to this area, support area, before entering a buy position. So we entered around 18.29. Let's just do it there. We had 18 pip stop loss. So around, boom, around there. And we were actually targeting this high here. So the previous high, around 18.25, around there. So it's a nice 1 to 3.71 risk to reward on this pair. So what actually happened with this, and why did I place the stops and take profit here? So the stop loss, as you see, just below this double bottom area. So I knew that if price broke this level, that my analysis was wrong and price could continue to the upside. Nice. 18 pips, very small stop loss for gold, and that's why I actually go down to lower time frames to find these little moves. Now if we get that out of the way. As you see, when price comes to these areas, very few wicks below. But if you look on the higher time frames, you wait for the candle to close, the body to close above a certain area. You could be waiting a while, and you could miss these areas of entry. So when we entered here, boom, price went straight into profit, broke out this consolidation, broke this zone here. So if we remove the Fibonacci now, boom. Now what we're looking for is price to carry on. So we also had this little area here. If we extend it, we had a little bit of resistance here in the past. So we could see what happened at this level. So we had a nice pullback, rejection. So this is perfect here. So if we actually draw our Fibonacci, you can see that price came down, rejected the 38%, doesn't really matter, but mainly we rejected the area of this box. So we came into this box, boom, 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 out, rejection, and then this is when we look for the push up. And there we go, push straight above this area here again, wick up again. So at this point we are around 3.3% in profit. And I think this is where price actually began to reverse. Yep, there we go. And if we go to current price now, we can see, yeah, price is falling back down now. I actually told my members to close at 3%, so that was around there. So 3% on your capital, more than a bank will give you in a year. £100,000, you're getting £3,000 just from this one trade. So if you actually wait for the setup, see, I waited for the retest of this support instead of just entering on this massive bullish candle here. We had our analysis, we had our confirmations, we had the double bottom, we had the bullish engulfing and the retest, and yeah, the fib 61.8% rejection on the higher time frames as well. If we go on the other time frames, what you can see is on the 2 hour, one candle and our take profit was pretty much hit for 3%. So if on the 4 hour candle, one candle, boom, take profit hit. The 1 hour again, two candles hit, and then reversal back down. So I'm not really complaining. 3%. A lot of people would be like, oh, 3%, is that it? You only caught 54 pips. Pips don't matter when you've got the small stop loss. You could have a 30 pip stop loss, and if you hit 90 pip take profit, that's the same as having an 18 pip stop loss with a 54 pip take profit. It's exactly the same. If you think that more pips mean more profit, sort your trading out, because you have no clue. Just being honest. Being given the wrong information. They're seeing these signal people. They're catching 300 pips in one move. Yeah, well, if their take profit is 300 pips and their stop loss is 150 pips, then it's only a 2% gain. Whereas if we're catching 50 pips here with an 18 pip stop, we're up 3%. So pips don't matter. Risk to reward and risk management matter. Pips don't. I don't know how people don't understand this. It's quite basic knowledge, but not everyone is taught the same. A lot of people are taught that pips matter when they don't. So yeah, quick analysis of this trade, and this video is trying to show you how I actually trade gold using this simple strategy. Just go on the higher time frames, see where these levels are. So you see we had this level here on the 4 hour, boom, boom, double bottom formed, bullish engulfing, rejection of the support and the retest, and then boom. We closed 3% profit, boom, beautiful. But yeah, that's all I've got time for in today's video. I hope you did learn a few things, and I hope you did enjoy. If you did, smash the like button, subscribe, and I'll see you in the next one.